Hello everyone, new video today, finance to go here, and yeah, this is supposed to be a little special video in regards to PayPal, or to be more precise, PayPal's most recent quarterly results. So as you guys can see, the PayPal quarter results had quite the impact, and I personally, though I was at work, took my time to look at the data firsthand. And well, what I do while I analyze the earnings report, because that's what I like doing. I never really listen to anyone when it comes to stuff like this. But what I usually do is I write down all the important things to me, what I want to see, what numbers are to be expected, and the numbers I would like to see. And I do that for sales, revenue, EPS growth, active accounts in terms of PayPal, and lots of other things, key figures that are very important to me, because in my investment thesis, I'm investing in PayPal not because we get such a great deal on value, but because I see PayPal's opportunity, which lies in the always, basically the services that PayPal can provide that actually generate money, big money. So in PayPal's case, that could be the buy now, pay later system, that could be PayPal ads, or in a way it could also be Fastlane, since that was announced to be such a phenomenal product that this service could alone justify much higher margins for PayPal and much higher costs for merchants, just because it's that much better at letting users check out at the merchant website. So recently, or over the past couple of months, it's gotten very silent in regards to Fastlane, and even in regards to PayPal ads, we didn't really hear all that much. Alex Crest didn't really mention a lot either, and the only intel we really got was from Jamie Miller a couple months ago, where she said that macros are really weighing down on us, and that's all we had. That's all I had to work with. Other than that, before I head into the earnings report, my 2 cents on it, and what I'm going to do in the future. I didn't expect this. So PayPal is known to be a candidate that under-promises and over-delivers when it comes to their financials, when it comes to their earnings report. So when they say we do 100 million, then what you can at least expect is like 120 million. So a good comparison would be that student at school that says he's going to get a C. He's going to get a C. He didn't do well this time, but everybody knows he's going to get an A, or at least a B. And then when he gets his grade, it's actually like an A or a B. So that's PayPal. So what happens is that everybody expects PayPal to get an A or a B when they say they get a C. But this time, they said they get a C, and they didn't get a C, they got like a D or even E. So they got a really bad grade and did a very poor job in my personal opinion. I had written down all my keywords, and I was skimming through the earnings report and was taking note of all the things I wanted to see. Sales were lower than expected, like the revenue was definitely lower than I had hoped for. Not too important figure for me, but that's something to be take note of. Branded checkout did way worse than I expected. Way worse. So I didn't expect that at all. Active accounts, I was hoping for some quarterly growth. Didn't happen either. Year over year, I think active accounts were up like 1%, but that's not really a lot. So I'm happy they didn't decline there, but yeah. So now let's get to the most important part, which was, or which made me feel, or it gave me a very gut-wrenching feeling. It's because when I opened the earnings report, I didn't see Alex Chris's name. I just saw that Jamie Miller was mentioned there as the the interim CEO, and in that case, that really changes a lot for me, because I was not just investing into PayPal, I was also investing into Alex Chris, his ideas, the things he told us about, the ads business, Fastlane, and I feel that explains quite a bit why there wasn't really much mentioning of that in the past months. So that really hurt, seeing all of this, and I didn't feel quite well. I have to admit, I was very wrong when it came to the expectation of the quarterly results. Like, in no world did I expect results this bad. And the worst part isn't even that the numbers aren't really good, because they are not good, but firing Alex Chris after such a short time is really bad in my opinion, because he seemed to be very adamant about changing that Titanic PayPal into that sailing ship that can act smoothly and agile. He didn't really deliver too much on his promise so far. The execution on that wasn't too great, and PayPal themselves in their earnings calls, they criticized that. However, such a process naturally takes time, and firing the guy to be responsible for this big change, I'm not quite sure if that's a good thing. Like, to me, that feels really, really bad. When I saw that, damn, I was feeling bad. Like, I can't even explain how bad that made me feel, because I just felt like we were being lied to completely. Because a few years ago, not quite sure if you have been invested into PayPal or focused on what they've been putting out, but I definitely focused on what they sent out to the investors. And back then, I think it was like 2023 or 2022, they said something like 2023, not really a great year, things will change. They will set a lot of changes in motion, but that takes some time. They want this profitable growth. They want a very profitable company, and they want to change things up by doing all these other things. So they also said that 2024 will be a so-called transition year. And naturally, in such a transition year, you can't really expect much. Like, it's natural that the company doesn't really grow all that much, because there's so much changing in the company itself. But they also put out guidance for 2027, where they made very great promises, basically announcing lots of growth. I think it was low teens growth or even mid-teens growth, something like that. I have to look that up. So don't take this as a given so far. I'll do more in-depth videos on that soon, but in this case, I wanted to give you a quick update on what I'm going to do. That was cut. So this guidance with this earnings report, they said, that's not going to happen. That's slashed. That's done for. 2027, not gonna happen. And when we were in 2024, we could see that things aren't doing perfectly well, and that it takes a bit more time to fulfill on their promises. So 2025 was supposed to be another transition year, and that's what started the whole new downfall of PayPal. Because at the beginning of 2025, not sure if you guys remember, but we can just take a look here. Basically in here you can see numbers were okay, but stock went up a lot because people were expecting, okay, transition year is over, so let's take a look, let's wait for the earnings report, and when it's there, things can grow again. We are seeing that profitable growth. PayPal is a growth company, stuff like that. But that's when they announced, okay, another transition year, 2025. There's not really much going to happen there. All right, so next thing you know, 2025 happens, and as you can see, we haven't really seen much of anything in there. Stock remained mostly flat. Naturally, we saw some downers, but we also saw some uptimes. Partnerships, OpenAI, all those cool promises looked very tempting, but at the end of the day, the stock markets, the investors, they took a margin of safety here, put PayPal a bit down over the past weeks because they weren't sure if they can execute, and having only that information by Jamie Miller saying macro isn't doing too well to PayPal led to the stock doing quite bad before the quarterly results. And I personally thought, okay, they're sandbagging. It's the kid that always says he gets a C but secretly gets an A. So I was thinking, okay, here, when we see the quarterly results, they're going to be slashing everything. They spend more money on marketing, so I was expecting active accounts to grow greatly by at least 1% over a single quarter, not just 1% over an entire year. So an effective rate of like 4% over the year, that would be great. But no, nothing. All the good parts were just that the good parts that I was hoping for were like mediocre at best, more just okay. And the bad parts were like really bad. Like some things in there that I was not really happy about to see at all, because for me, I invested in PayPal because of three theses: the bull case, the bear case, and the base case. I saw the bear case to be non-existent, and the base case to just be a matter of time until we see the bull case, which is PayPal implementing all these OVAs, which would lead to PayPal becoming more of a service company that does a lot of things and especially makes money with ads like Amazon or Uber or like Meta, you could say, almost. So PayPal could have done that, and they had very creative ideas, but they just never really delivered anything of that. And I was hoping to read more of it in the earnings report because I was really looking forward to it. But did I see any of that in the earnings report? No, I did not. Nothing there. Alex Chris is slashed. New CEO is appointed. We'll take a deeper look into that in the future. Not right now, but on another video, I'll make a separate one on that. And last but not least, all the cool things that were mentioned years ago are pretty much nowhere to be seen right now, and that's really worrying me. And when you look at the guidance for 2026, it's not looking really good either. Let me just read out loud what they are saying or expecting. Transaction margin dollar, slight decline. Interest on customer balances, roughly flat. That's okay. EPS growth, low single-digit decline to slightly positive, and that's really bad. Imagine having a company that's buying back 10 to 20% of their entire shares, and despite buying back 10% of their shares, their earnings per share are declining. That's crazy. That's really bad. EPS growth, mid-single-digit decline, also insane. Adjusted free cash flow apparently is still going to be around $6 billion, which sounds alright. That's actually quite decent. But yeah, that guidance, really bad. And at this point, I don't know why they raised guidance in 2025 two times. They raised it twice in 2025 just to leave us with these bad quarterly results. Like, if I had to grade this would be like By my feeling, this would be F grade, but more realistically speaking, it's probably like D grade if you take into account that the guidance is this bad. So what could be happening? What could be the case here? It could be the case that they're setting the bar very low for the CEO, the new one, to take over the reins so that he can exceed all this guidance in a very huge manner. Like he could do much better than what is being put out here. That's possible. But given that you have this student that keeps saying he gets a C, and then he ultimately leaves us with an A, and this time he said once again that he's going to get a C, and even said, "Oh, I have a good feeling this time," and then it's like an E or an F. That leaves a bad aftertaste, and for me, I do have to admit that PayPal not delivering on any of their promises and being this intransparent definitely makes me lose a lot of trust in PayPal. Like, I think just by this earnings results, and I also listened to the earnings call as much as I could do in my break, made me lose a lot of trust in PayPal. So my trust in PayPal is probably down 80%. The bull case is basically off the table because PayPal themselves, they expect the OVAs to do nothing next year. Like those, that income that they're expecting from there is apparently flat over the next year, which is crazy to me because I was expecting PayPal to reel in some PayPal ads money, but apparently not. And that was my entire bull case, right? Like all these OVAs were supposed to rein in all those big margin money, the profits, the growth. And PayPal being a growth company is the bull case for me. So what I'm left with is the base case. PayPal doing all right, very small growth in like the mid-single digits, like 2 to 5% maybe, so low single digit to mid-single digit. That's something that could happen, but if we just look at their guidance for 2026, it's looking really bad. Like slight decline in transaction margin, all these things. That's not good. That's pretty bad. And I listened to their earnings call too. Not really a lot there either. Like the questions that were asked by analysts, they weren't really answered all that well. Some analysts asked more or less the same question, one after the other. And to me, it felt like they were giving a whole lot of nothing. And the things that I wanted to hear more about were not discussed at all. So for now, that left me with a bad aftertaste. So at this point in time, don't get me wrong. I've decided to not do anything rash. I'm not going to sell my position. But I'm not buying today either. Not because I don't want to, but I don't have any liquid cash on me today either. So I can't really do anything right now. Earliest where I can dispatch anything would be starting next week again. And so far, that was a shocker. So when Alex Chris said he's going to shock the world, I didn't believe him, but now I'm very much shocked. Seeing a stock as PayPal decline almost 25% in just the matter of 24 hours is crazy work to me. It's barely believable. But it happened. Fundamentally speaking, PayPal is a lot cheaper right now. That's the case, for sure, if you look at today's numbers. But since guidance isn't guiding for growth, but for a decline, we are basically losing another year. And losing a year in the stock market basically means you do have to put discount the stock in itself. So if you discount PayPal by like 10%, And then because you do want to make like 10% a year in a stock, pretty much like 6-7%, but like margin of safety at the very least, so 10% is what you want at the very least. And then if you add that they've not doing over promises and ended up, if you can consider that they didn't over deliver and under promise, but did the opposite this time. They over promised and under delivered. If you consider that as true as well, you do have to do another margin of safety, which should be at least 5 to 10%. So in total, we are already at 15 to 20%. That the company, in my opinion, is worth less than it was just a few days ago, which is crazy to me. Now, if you include that the bull case is basically off the table because we haven't heard of all those nice things that we are promising, all those OVAs, PayPal ads, Fastlane, it wasn't mentioned at all. You could see something about PayPal ads, but it was just a whole lot of nothing once again. And seeing how they are guiding that they are not growing at all in that matter, which is crazy to me. Like, they should be growing the ads business like crazy, like it should skyrocket next year, and they weren't all that enthusiastic either. Makes me believe that the bull case is off the table, and if that's off the table, PayPal is basically, for me at least, it's worth like another 10 to 15% less. So in total, we are now at like 30% less that it's worth to me. So when before I said I would eat up all the shares below the 70s, now after like taking that 30% margin off of that, we are pretty much at a level where you say, okay, I'm just going to buy below $49, which still, if you look at the current share price in here, it's at $41. It's still a great buying opportunity, but I can't deny that I really feel like I got tricked in a way, because all those statements they've made in the past couple of years, they were either not executed, not done, or not communicated, or a combination of all those three things. And that's really, really bad. That's not something I expect from a company worth $1 billion. So in this case, I do have to admit that in my previous videos, I certainly was wrong expecting this great of a bull case. And I personally have to really set my mind on what the company is worth now, how I'm going to value it, and what I'm going to do in the future. So don't get too discouraged. Take your time, think deeply about the company, look at the earnings call and the earnings results. Don't read all those news articles, and it's probably best to avoid YouTube videos too. Maybe mine as well, I don't know. Can't really tell yet. So in either way, just be careful. Do your investment research, and if you feel PayPal is still a buy, or maybe to you because you never believed in the bull case in the first place, then maybe now PayPal is even more a buy than it used to be. That's even better then. Make your decisions based on that research and then act accordingly. Thank you guys for watching. I'll see you in the next one, at the very latest in the PayPal Weekly, and goodbye.